All right, guys, thanks for joining us. Excited to interview Dustin from Buckle Insurance. Heard about Buckle Insurance from the Rideshare guy, and then my buddy Steve from Rideshare Rodeo, I think, interviewed your partner or co-founder. And so, I'm excited to talk to you about, I mean, it sounds weird to say we're excited to talk about insurance, but man, it's such an important thing when you're doing this gig work because a lot of stuff doesn't have insurance. Welcome to the show, Dustin.
Thank you so much for having me.
I always get excited when there's new players entering the scene, right? That's what I want to know. All the new cool stuff.
Right, for sure.
Gosh, I still have hair. I mean, you say I'm new. It's been 5 years. So,
yeah. Why don't you give us a 60-second elevator speech of if someone said, "Hey, what do you do? What's your jam?"
Absolutely. And once again, thank you for having me. So what is Buckle? Buckle is a financial services platform that is really focused on the participants of the gig economy. And very specifically, starting with insurance, we're looking to support the drivers and the people that support the world that we live in. So I said we started with insurance. We're branching into credit in the form of leasing, but to be a one-stop shop for financial services for the people that provide the services within the gig economy. And that is the focus of Buckle. And I mentioned a second ago, it's been 5 years back in January, and really making great progress in this space, which is, as you guys know, evolving so fast, so rapidly, and just changing the world that we live in, the way we consume goods, products, services. So sitting right in the middle of it all.
There's definitely no doubt that gig economy is here to stay, right? And it is changing the way we all go to work every day, and the way we do our work. So from that perspective, it's really interesting. So you're saying it's not just insurance; that's just where you started.
That's correct. We started with insurance because for us, that was the most logical first place to begin. But what we realized is that the vehicle, the car for this population is probably the most important asset they own. And first, if we can protect it was the first goal of us. But then at the same time is how can we help them buy better, safer, bigger, vehicles to use in the gig economy at affordable interest rates, paying fair rates for their cars that they're being penalized because of their credit score. And we evolved from insurance into, a broader financial services platform for this driver base.
Wow. So I'm assuming then from that perspective too, early on, it was always when people are out there buying a car, quite often, and still today, I'll get the question on the forum is how do you buy a car only showing Uber or Lyft as your income? People most of the traditional financial companies, they don't want to do that, right? So are you helping with that as well then?
Yeah, I think you actually summarized it very well right there. So I taking a step back, it starts first with credit score. And the credit score trap, as we call it, is this population that is moving, Uber, Lyft, DoorDash, Postmates, you name them, right? They tend to have lower credit scores. So they're initially penalized straight out of that, right? So that's challenge number one. But then the financial services world is built on this, very easy W-2 income for 2 years. That's very easy to verify. I get the thing from Paychex or ADP, and then I verify my income. But when you have a person who shows up and maybe they have a job that's full-time, and they also, have an Uber and a Lyft pay stub, and they have a 1099 from Grubhub or DoorDash and Amazon, and they're all over this, and the banking doesn't know how to handle this. And we've figured that out and figured out how to provide these people credit. We figured out how to provide these people access to this, to vehicles and stuff that they wouldn't have normally. And in doing so, we're able to lower their interest rates. We're able to provide them the opportunity to buy cars in reputable dealers, not on these B lots where they're being taken advantage of.
Yeah, Jesper's pointing at me because I do so many gigs in the winter.
You have like 9 or 10
Not this year, but I'm a full-time gigster from November to March, and then I do a seasonal job where I work outside. But I have usually it's 5 or 6 that I'm bringing in, and my accountant's like, oh, there's another $50. There's another $50. But So I really love that you're doing that. It's funny you bring up they have a job, a W-2 and gig work. See, when I apply for a car loan, I don't even bring up my gig work. I use my wife's income and my W-2 from the summer, and that's it, because people don't know what to do with that. They're just like, I'm like, it shouldn't matter. I understand if you're a full-time gig worker, the consistency is a little weird, right? So like one week you make $1,000, the next week you make $200, and they look at that and like, why in month, month 4 you made half of what you made in month 3, and so that's a little weird. But I'm glad you guys are doing something with that.
Well, one of my friends is the banker, and he actually even used to work against you if you mentioned that you were a gig worker.
That's why I don't mention it.
Well, exactly. When you're out there trying to get an auto loan, because the fact that you are a gig worker, you're putting more than normal stress on your vehicle. That's not what these systems aren't built for. That they're built for, lending you money to buy a vehicle for personal purposes, not for commercial purposes, right? So it's like that thing. And so obviously, Dustin, that's a place where you are in right now, helping solve that problem.
Yeah, I mean, the financial services world is you're either personal or you're commercial, and you're not both. And what the gig economy has done is wreck them together.
Yep.
And you get someone that's living in this in between, and the whole system is broken, and it needs solutions. Right. And these solutions need to be sophisticated. They need to be elegant. They need to understand the people that are in this middle, the ground, which is the gig economy. And that's the problem we're solving for. Because, fast forward, if you looked at pre-COVID to now, I mean, the gig economy has just exploded out of this world. Yeah. My parents would have never used, a food delivery service or Amazon. Well, they probably would have used Amazon because everybody uses Amazon, but they're now adopters, and it's just evolved so fast. And I think we're going to see it even, accelerate further, whether it's, services are starting to come to the house as well. And it's just been an interesting phenomenon, but it's the insurance is lagging behind, credit is lagging behind too. So we're trying to really fix that problem.
It's interesting you say services. There's another big gig economy out there that's doing exactly that, bringing services to the house. So that's I think you're absolutely right. It's not going to be just outside the house. It's also going to be bringing more inside the house. So that'll be very interesting to see how that's going to happen. Talk to me a little bit about how Buckle works for insurance wise. So how is it meant to be? Is it like an additional, just like you in Michigan here, we have, and I know that's how it is in many other states too. You have your normal insurance, and then you have a rider. You have the additional, rider. How does Buckle work? Do you become my auto insurance, or is it just an additional add-on, or how does that work?
Yeah, so we attack the problem from how do we make this as simple and easy to understand out there, or as possible. So we actually replace the policy that a driver has, and we become the primary policy. So we don't take an endorsement approach or a rider, as you would have said, right? Yep. And we want our drivers to understand it. So we replace the primary auto policy that a driver has, and a Buckle policy goes into effect. And depending on our relationship with the TNC, DNC, right, the transportation network company, the delivery network company, depends on the coverage that we'll provide. But to really make it easy, in most instances, we'll provide complete coverage, very similar to a personal auto policy, but in a commercial framework. And we use a commercial policy that allows for heavy personal use. So you can use your car to drive for Uber or Lyft or DoorDash, or at the same time, run an errand, take a kid to school, go on a family vacation. But it's very easy to understand. It's one stop. It's you call Buckle, and we handle everything for you on your behalf. Unlike the rideshare endorsements driver delivery endorsements that exist, that maybe they lower deductible. They're too confusing. So we put the driver first, and we work with the driver to cover that car. So and our policies are very, very similar to what everybody understands, like $500 deductible, $1,000 deductible, whatever they want, payment plans that they want. So very similar to a personal auto policy, but we use a commercial framework to pull this off.
Does the price vary depending on what services you use? So I work for Walmart Spark. I do Amazon Flex. I'm doing a little bit of Uber and Lyft, and even a little bit of DoorDash. But I don't do a lot of DoorDash. Is the price more if I add the DoorDash platform, and am I paying more even though I might only do 2 DoorDashes that month?
We take into consideration who you're working with. So, because the risk profile changes, moving people around has a much greater exposure than moving a food or package around. So, depending on how you're using your vehicle, how much you're using your vehicle, the rates will vary. There's no doubt as well, the longer a car is on the road, the more frequently the car is being used in the gig economy for commercial use, that will affect rate as well. So someone who's driving full time pays, higher rates than someone who's driving part time, because, most people will agree the longer a car's on the road, the higher likelihood of an accident occurs. So the answer to that question is
you have to speed as fast as possible.
We're getting ready to roll out a telematics program as
well. Oh, no, I'm out.
No, you don't have to take it, but we're trying to get the best rate for these drivers because they're just overpaying for their insurance regardless. And I think, Jason, you'll find that even our telematics product is pretty slick in terms of the coverage that it provides and how it provides it and the discounts that come with it.
Well, I'm hauling ass from Sparta to Grand Rapids the other day. I was late for an appointment. I took this order from Walmart, and I looked at it, and there was one drop in Sparta. I'm like, I don't know if I'm going to get to my physical by noon. I'm like hauling ass. I don't need telematics to be like, yeah, he was doing 75 and a 55.
Please don't drive like my 16-year-old son.
I know. I'm a safe driver.
Safe. I'm not the one who got canceled from Lyft for doing a speeding. Oh no, maybe I was.
Yeah, that is you.
I love the word safe. Yeah, to an insurance guy.
No, I do try my best. I don't normally drive like that because anyways, it beats the hell out of your car. And my rig has 240,000 on it and it's still running strong. And it's paid off too. So I don't need to lose that thing.
Oh, go ahead, Dustin.
No, but I was going to say, closing the loop, just depending on who you're driving for, how you're driving, it does impact the rate.
Okay. Before Jesper jumps in, what about me that I don't do any gig work really? Once in a blue moon from like mid-March to like November. I'm literally driving to and from work. It's like maybe 35 miles a day, and then it usually parks in the garage.
It's interesting when you get outside of like Manhattan and San Francisco, the big metropolises. That's more what the driver's starting to look like, and they're more part-time drivers, which is our real hardcore focus, right? The full-time driver, it starts getting to be taxi. It starts really becoming a commercial risk. So that's really our sweet spot is people, that part-time driver that's in Michigan, that's in Atlanta, that's in Ohio, I don't know where Sparta is.
Personally. Oh, it's just a little,
it's in Michigan.
It's a podunk town north of the city, but it was just weird that Walmart, I've never delivered that far for Walmart, and I didn't really pay attention when I picked it up. I'm like, oh no.
It's interesting. On a side note here, the delivery space, the deliveries tend to be in a much tighter radius than Uber and Lyft, and it also makes for a different risk profile. Like when you look at someone like GoPuff, they might only deliver in a 5-10 mile radius of one of their warehouses, and that changes a lot of things. Versus I pick someone up at an airport and might have to drive them 100 miles at 11, 12 o'clock at night and then get back. So we take all of that into consideration.
Cool.
Okay. So now I have like 10 more questions. So just bear with me. Okay. So Buckle as insurance, you go in and you take over that all that thing. How does that compare to your traditional personal insurance when it comes to what do you cover? Do you have, like for instance, my little car that's been paid off for 10 years and only have PLPD, right? I don't need it to cover also the car because the car isn't worth $200, right?
Yep.
And then I have my van, which I still carry full coverage on because it's my main vehicle. How does it work with that? Do you have that kind of model as well? And then, of course, a follow-up question to that is, in the whole insurance world today, when you look at it from a personal perspective, quite often you have multi-policy discounts and stuff. How does all that play into this?
All right, Jason, hold me accountable on the second one. Let me answer the first one first.
Okay.
Okay. So Our policy is flexible and very easy to understand. So, if you want, you can obviously multiple cars on multiple policies. You can have full coverage or physical damage on some. You can have uninsured motorist on the other. You can have,
Okay.
So
all the same things that people are
yes,
used to, you have.
We use a commercial framework, but very much mimic all the best attributes of a personal policy married with a commercial policy to give that simple. I understand how my policy, is used, because insurance is confusing enough. So it's very, very easy to understand and very customizable. Do I want medical payments? Do I want $500, as I mentioned, $1,000 deductible? So really, really easy and very simple. The second question, Jason, now re-tee me back up.
The discounts, the offering discounts,
multi-policy discounts. Yes.
So today we're a monoline auto only. So, if you're getting a renter's, if you're bundling, call it renters or home with your auto, we're not able to provide that discount. In the future, I'm sure we'll be moving into that space. But today we're just really focused on that auto. Now we will write, 3-4 autos per household. I don't know the exact numbers per state on the underwriting guidelines, but we'll cover the whole house depending on how many vehicles are out there and whatever's listed within the underwriting guidelines. But we're just not in a position to be offering renter. We're just not mature enough, big enough yet.
And you really don't. That makes sense. That makes total sense.
So as far as how do you tell someone that everyone has trust, right? We interviewed somebody last night for an app that you wash people's clothes. Okay. So there's a huge trust issue. You see me coming up. I have a giant beard. I'm a nice guy. I'm a lovable guy. I have a great, I'm super nice, days. But some days. Yeah. But when you look at me, you're like, oh, this guy's going to wash my clothes. You pick up the clothes. So there's a big trust issue with clothes and with insurance. Now, obviously we haven't heard of Buckle. We've heard of Progressive and State Farm. Is your insurance backed by one of those and you're like kind of a middleman, or you guys have, how do I say that?
Enough financial backing.
The financial part of it.
Maybe an easier way to answer is we're a full stack or full service insurance company. So we own our own licenses. We do our own underwriting. We are admitted at the state level. So when we apply to go into any state, we have to work with the departments of insurance who examine our financials, who examines our, surplus reserves, make sure it's all legit, and admits us into the state. And by using, this might be a little technical, but I think an important point, by using an admitted insurance carrier that the state stands behind us, really showcases the financial strength that we're able to provide and the stability that we have. Because when the state admits you into its regime, if something were ever to happen to us, the actual state is stepping in, will step in behind us. So we get extremely heavy scrutiny on our financials, on our underwriting, on our rates, rules, forms, all these, because we have to be viable for the success of the greater population.
Okay.
Yeah, I think that, and I'm sure you already know what your biggest hurdles are, is probably you don't have the name brand of, insurance out there. One question I'd like for you to talk about a little bit, and this has always been the weirdness with gig work, right? When I first started out, no rider, you're rolling the dice. Like we all rolled the dice. Jesper rolled the dice. I rolled the dice. Like you didn't tell your,
there's just no way.
Yeah, you didn't tell your insurance company, whatever. So then the rider come in, right? And like, okay, sweet. Well, that only covers, people don't realize that only covers Uber and Lyft. It does not cover the delivery platforms. Is that something that is true, at least in the states that you're in? And do you get a lot of questions about that?
Get a lot of questions about that. Every delivery, TNC, they all handle them differently. And each policy, and I would encourage, and I know this is very difficult, I would encourage it when you work for these platforms that you read the fine print.
Oh, yeah.
Because
nobody does.
Nobody does. And so where we step in is when you have a Buckle policy, we're there for the driver, right? And we're there to cover the driver's vehicle. That's the most important piece. And then depending on our relationship with the delivery company, we'll then figure out how liability works. But, it is a risky business if you don't understand the risk that you're taking and putting your car at risk to do these gigs. And some are better than others. Some cover, some don't, and they're all different. I think over time there'll be regulation at every state level that lays out the coverages that you have to operate for these companies. And I think it's a needed thing, right? Because it protects everybody. Sometimes regulation is really good is when it provides a very, very seamless, experience where people aren't confused and they understand the risk that they're taking or not taking in order to do these businesses. Again, we find that these vehicles are the most important things to these drivers, and covering them is so critical, because if you get into an accident, not only you can't move around, take your kids, do whatever you need to do, but you can't even earn an income because that's your income source. Right. So how do we cover these cars, get these cars back on the road in $500 deductibles, not $2,500 deductibles? I mean, who has $2,500 right now just to just to get my car fixed? And the odds are the collision, is $25,000 to $5,000 anyways. And it's fixing those problems, I think, are so critical. Especially, the passion that you'll hear, I think, if you listen to the rodeo podcast that my partner Marty talked about, is, what I learned, and this is my soapbox from COVID, is, we were able to stay. I'm lucky. I was able to stay home, work from home, be safe. And these were the people that were supporting the world that we lived in, delivering our goods and services, all these things. And, they're the frontline. They were the frontline workers, the warriors that get war against COVID. And we need to protect these assets for these people and help them out. So that's really the mission mantra you'll hear around, Buckle. If you listen to all our podcasts, whoever we talk to, you talk to our member services who help these, our customers who we call members. It's so critical is that car has to be fixed because that's their asset. And when they're spending this much money on insurance, which is probably one of the top expenses they have outside of their loan payment, their cell phone bill, it should protect the thing that they care most about.
I think that was awesome. You answered one of my follow-up questions. A $500 deductible that, people can live with that, right? But I think it also sounds like you're covering another big thing that really confuses a lot of people, particularly when it comes to rideshare, which is these 3 periods, right? The 3 periods about, when are you actually, are you on your way to pick somebody up? Are you on your way to drop somebody off? Or are you waiting for a ride? This whole 3-period system that Uber and Lyft has introduced, you don't care about that, it sounds like, at all, right? You're like, if there's an accident, you guys are going to handle all that. Is that what I'm hearing correctly?
Yeah, you are. So we're very familiar with the periods and on app, off app, all the slang.
Absolutely, right?
Yes. So what we do partner differently with the various companies based on the risk that they want to take versus what we want to take. But what we really do is we're really focused on the driver and getting that car fixed. And in many circumstances, we'll cover liability in all periods. And in some circumstances, we won't, depending on, the relationship we have with those dispatch companies. We tend to work with most of the dispatch companies directly right now. So, it's a really good situation. But we put the driver first, and that's the key piece.
So I may be asking the same question. So, for example, I'm out driving, I'm delivering DoorDash, and I hit somebody. Do I got to deal with DoorDash as a Buckle customer, or does Buckle say, we got you, we'll deal with whatever we can get from them, and then Buckle's going to come in and pick up the rest?
We're your primary insurance. You call us first, and then we'll help. We'll go from there.
Oh,
it's just too hard. I mean, anyways.
Absolutely.
So we handle the slang, first notice of loss, and all the traditional aspects of it all.
See, that right there that's key right there, because so many times I see the question, I'm in an accident, who do I call?
Yeah, Ghostbusters isn't the answer.
But that's the thing, right? It's like, who am I supposed to call? And it used to be, don't call your insurance company, because if you're in an app, you might lose the car.
Yeah.
Well, yeah, and especially in the delivery space, and call it periods 2 and 3, where there is no passengers. There's a lot of it's just, I'm going to throw the thing, whatever I'm delivering in the trunk, and I'm going to lie about it, and hopefully I get away with it.
You are absolutely correct. We all kind of chuckle about it, but I'm sure it happens every day. Because how else are they going to keep their vehicle and keep their one way of getting the income? No, it's true.
And the drivers are in a difficult spot. And I think regulation, the regulators are starting to understand that as well and trying to help fix this. It's just, government's a slow moving piece of the puzzle. But, I think we'll see over time, just like when you get into a taxi, they have, a commercial taxi insurance policy that is very clear for the driver to understand. And I think over time, our policy will be on the forefront of regulation as, these drivers need policies that they understand.
Mm-hmm.
So one question I actually took, allegedly, hypothetically, I took an off-app trip this weekend, and it was long. I went to Columbus from Grand Rapids.
Hear no evil, see no evil.
It was 5 hours and 10 minutes one way. So that's always the question, right? We actually encourage people on our show not to do that, not to go off app, because then you're not covered under the rideshare's insurance. But would that be something that you guys would cover if we did that?
That is a good question. Today, under our current policy, I do not, and I'm not a total expert at all our guidelines, and you can't hold me to it forever. My guess is no, we would not. Our policy is designed to either be personal or this gig use. So if you were working with Lyft or you were working with Uber, absolutely, and we'd have coverage. But if we kind of use the term ghost riding, right. Shadow riding. We're not. That's becoming a taxi.
That's interesting, because I think there's a market for that, but not the commercial policy where it's $500 a month. You know what I mean? I think a lot of people want to start their own little business, and I get it. Insurance is expensive. That's why all these new rideshare companies come in and they're like, yeah, we don't have insurance for you. Like, well, we're not driving for you. Like, if you can't cover us, and that's why a lot of them aren't successful, because they can't provide that insurance. But yeah, I think there's a market out there. I just don't know where it's at, and maybe you guys will figure it out down the road. But because unfortunately, those companies take a ton of fees on those big rides. They do, and even taxi, in a taxi limo world, the dispatcher is always taking something along the way as well. In the taxi limousine space, those full-time drivers, they are paying really high commercial insurance rates that is providing for that exposure, that coverage. So, that's why they do exist. And there is value to those companies helping protect the general public, because when bad things happen, it doesn't end well.
No.
So
you mentioned that you are really in the financial services space for the gig worker. Correct. So where do you see? So we talked about financing of vehicles. We talked about insurance. Where else are you guys going? What else? What is like? Where are you going? Where are you planning on going? Where do you think you guys are going to be 2 years from now? Are you guys going to move into other type of supporting services, like what's it called? Saving up for our, what is it? I'm looking for, Jason. Come on. Retirement.
Savings?
Thank you. That kind of stuff.
Oh, retirement.
So we think we're tackling some big problems right now. Just insurance and financing are pretty substantial. And I would say it's, to achieve all our goals are going to take a couple more than 2 years on both of those fronts, especially on what's happening with inflation and the used car markets. And there's a lot of noise, chaos in that space. I would see us moving into providing more services that the drivers want that are, maybe some income protection services, but with more likely partnering with other people to do things like that.
Okay.
We really modeled ourselves a lot after USAA. My partner Marty is ex-military, West Point grad, served for years, still serves today. And he's an incredible experience with USAA. He's got like 20 plus policies with them. And, it's understanding what this membership needs, this member of ours needs, and providing those services, some through us that we underwrite and we take the risk on, some through third party. So, my guess is we'll offer additional services. But I would say for the next, couple of years, the focus is really going to be around insurance and really then in financing, because it is a huge problem that is growing so fast.
As far as the financing goes, is there another site that someone would go for that? Because I didn't see anything on the Buckle
Nope,
site.
It would all be under buckleup.com. There's a tab somewhere in there, I'm sure.
Is there?
I would go into my browser right now and look, but I'm afraid to mess around with any of my my mute, stop cam, mic, all those things.
Oh, it's okay. We
I told all my kids around me to be quiet because I'm on the East Coast and it's 7:00 and homework time.
Oh, yeah. Okay, I must have missed that, but yeah, that's great, Dustin. Thank you for the time. I'm super excited about this. I don't think you're in Michigan because when I was on a radio show with Steve, he was talking about Buckle, and then of course I'm online and I requested a quote, and like, oh, we're not in your area yet. So, what states are you in? And then what is your growth plan moving forward with that?
Yes, today Georgia, Tennessee, Illinois, Texas, Maryland, DC. I think Pennsylvania next week. Arizona and Nevada at the beginning of next month. I'm a little, the rollout plans are
that's fine.
I mean, what's challenging about insurance is it's regulated at the state level. So it's not like, hey, we want to do business in the United States and we're off and running. We have to go state department of insurance by department of insurance and get those things right along the way. So there's a roadmap to roll out to the entire country without a doubt. So I think roughly we cover about 30% of the U.S. population right now and growing rapidly. So yes, that is correct. We're not in Michigan, but that is one of the states, obviously a big state.
Good luck getting in Michigan.
I'm sure the no-fault insurance of Michigan isn't going to help you at all.
There's a couple states that are challenging, right? Michigan, Florida, Kentucky, those no faults, but yeah. we'll get there. I mean, your citizens of the state need us, and we provide a great service. So we will be there. It's just, it was challenging when we started this endeavor 5 years ago. I would have never really thought like, oh my God, 50 states is 50 different countries.
Oh yeah.
Yeah.
And they all operate differently. And it's not just getting into the state and then you can do business. It's how do you change your rates when they need to be? How do you augment your programs? And it's been an awesome experience. But as we build out our team, it's really been a challenge as we really get the expertise because they all operate differently.
Yeah, you got to have a smart staff, that's for sure. Any closing questions, Jesper, before you
wrap? No, I was just going to say it certainly sounds like you guys are solving some very big problems in the market right now. We can't wait for you guys to come here fast enough.
Absolutely. And it's an exciting, I'll leave it at this. It's an exciting place to be right now, right? I think we're in the forefront or the early days of what the gig economy really is going to be.
Oh, absolutely.
And to sit in the middle of it, and be friends to all, right? We work with Uber and Lyft and DoorDash and, you name them, GoPuff, and be able to work with everybody and be friends with all is really awesome because we get to see it all. And really this driver force is the evolution of the American worker. And it's just an exciting time to be involved with them all. So it's a fun time at Buckle.
Well, thank you for coming on, Dustin. We appreciate the time. We'll obviously put everything in the notes so people can check it out. And thanks
Jason,
again.
Thank you so much.
Drive slowly, no ghost rides, and speed limit, please. There's a reason those numbers are on the streets.